Hello everyone, and welcome to this month's trading summary video. Today, we're going to dive deep into the trading activities of our algorithmic trading system throughout the month of August. Throughout the month, the Algo system engaged in a total of 7 trades, each driven by specific trading strategies that encompassed various market scenarios. Out of these, 6 trades were profitable, resulting in a win rate of 85.7%. 1 trade failed, leading to a loss. The maximum profit achieved in a trade was 17.4%, while the maximum loss incurred was negative 4.47%. This impressive performance demonstrating the system's ability to identify profitable opportunities in the market. The Algo system utilized a mix of gap down, gap up strategies, trend follow strategy, trend reverse strategy, and breakout strategy during August trading. Now let's delve into the specifics of each trade, strategy, and the rationale behind the Algo system's decisions. The MRVI stock experienced a significant decline of -14.25% due to disappointing earnings. The algorithm identified an overreaction in the market and bought MRVI shares at a price of $9.83. Subsequently, half of the position was sold at $10.04, resulting in a modest profit of 2.1%. Upon careful analysis of the price movements, the algorithmic trading system anticipated a robust upward trend and opted to sell the remaining portion of the position at $11.54 approximately 1 hour and 4 minutes later. This strategic move generated a more substantial profit of 17.4%. Shortly after exiting the position, the stock price experienced a sharp decline. Now let's look at another gap-down trading strategy trade. PTON experienced a significant gap down of -26.32% due to disappointing earnings. The algorithm observed a price action indicating a potential rally. It bought PTON at $5.35. The Algo system exited the first half position at $5.58 per share, yielding a profit of 2.77%. Then the algorithm detected that the rally was losing momentum and decided to exit the remaining position with price of $5.45, resulting with a small gain. Now let's switch to the gap up long strategies. After the gap up opening, CLSK stock's price immediately started to rise, suggesting strong buying interest. Despite the initial rally, there was a subsequent pullback in the stock's price. Importantly, even after the pullback, the stock's price remained above the previous day's closing price. This is a positive sign indicating potential strength in the stock. The pullback in price created bear trap. Following the bear trap formation, the stock's price rallied again. The stock's price eventually broke out above the day's high. This is a significant technical signal indicating potential further upside. The Algo system recognized this breakout and decided to buy CLSK shares at a price of $6.26 per share. The Algo system sold half of the position at price $6.39 per share during the price rally to lock some profit. With upward momentum was still strong, the algorithmic system detected signs that the stock's upward movement might be losing steam or facing resistance. The algorithmic system made the decision to sell the remaining portion of its position at a price of $6.68 per share. Shortly after selling the remaining position at $6.68 per share, the stock price experienced a sharp decline. This suggests that the algorithmic system's decision to exit the trade was timely. Now let's look at the trend follow strategy trade. After the market opened, Foot Locker stock started to rally. The algorithmic system detected the potential for further upward movement in the stock's price and decided to buy FL shares at a price of $17.37 per share. As the rally progressed, the algorithmic system noticed signs that the upward momentum might be fading or that there could be resistance ahead. To lock in some profits, it decided to sell half of its position in FL at a price of $17.72 per share. Subsequently, as the algorithmic system continued to monitor the stock's price movement, it detected that the rally had likely come to an end. At this point, it made the decision to sell the remaining portion of its position in FL at a price of $17.38 per share. Now let's focus on the breakout strategy trade. Following the market's opening, UPST stock's price immediately began to increase. After the initial rise, there was a subsequent pullback in the stock's price, leading to the creation of a new daily low. Despite the pullback and new daily low, UPST's price rallied once again, formed a bear trap. When the price reached the location of the daily high, the algorithmic system anticipated that an upward breakout might occur. As a result, it decided to purchase UPST shares at a price of $31.28 per share. However, after the initial purchase, the price of UPST stock began to move lower and lower. It eventually formed a double top pattern. After the price made a new daily low, suggesting a continued downward trend, the algorithmic system made the decision to sell the entire position in UPST. This action was taken to cut losses, as it was evident that the trade was not moving in the expected direction. If you like the video and want to watch more in the future, please hit the like button and subscribe the channel. Now let's look at another breakout strategy trade. Following the market's opening, app stock's price immediately began to increase. Following the initial rise, there was a minor pullback in the stock's price. However, this pullback was followed by another rally, suggesting that the upward momentum was still intact. After reaching the daily high and consolidating for a few minutes, the algorithmic system recognized the potential for an upward breakout. The algorithmic system decided to buy app shares at a price of $38.46 per share. As the rally continued, the algorithmic system sold half of its position in app at a price of $39.24 per share. This action was taken to secure profits by locking in gains on part of the shares held. The algorithmic system continued to monitor the movement of app's stock price, staying vigilant for any signs of a change in the trend. When the rally began to fade, indicating a potential loss of upward momentum, the algorithmic system made the decision to sell the remaining portion of its position in app at a price of $38.48 per share. This sale was made with the goal of minimizing losses, and it was nearly break-even. Finally, let's look at the trend reverse strategy trade. Stock experienced a sharp gap down in its price. However, immediately after the market opened, the stock's price began to rally significantly, reaching $10.32. Following the initial rally to $10.32, there was a rapid pullback in the stock's price. The algorithmic system analyzed the price action and anticipated that the pullback had ended, and the rally would resume. Based on this assessment, it decided to buy HE shares at a price of $9.80 per share. As the stock's price continued to rise, the algorithmic system sold half of its position in HE at a price of $10 per share to secure some profit. As the upward momentum began to fade, indicating that the rally might not continue as expected, the algorithmic system made the decision to sell the remaining positions in HE at a price of $9.80 per share. This sale allowed the system to break even on the remaining position. That's our Algo system August trading summary. Thank you for joining us today, and if you found this analysis valuable, we invite you to stay connected by subscribing to our channel for more insightful content.